What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Ways to use the VWAP in your trading strategies. Everyone pretty much knows what the VWAP is. It's a volume-weighted average price. It's a trading benchmark that represents the average price a security has traded at throughout the day based on both volume and price. But what are the best ways to use a VWAP in your strategy? Well, today I have two of the best to explain to you how to use the VWAP in your strategy. Ben Bennett and Brian Shannon. We will go over ways that you can effectively use the VWAP in your strategy. Today's podcast is sponsored by TradeStation and FTSE Russell. Currently, TradeStation is running a promo just for our audience. New users will get 50% off brokerage fees for the lifetime of their account using this promo code, FUTRAFZT, as long as they open an account by July 31st. Go to tradestation.com/Anthony to learn more. Are you watching the stock market, specifically the Russell 2000? The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and Micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. We got the crew in here today. Two of the best in the biz when it comes to the VWAP. What's up, boys?
Hey, guys.
How you doing? Brian, Anthony, great to join you.
Likewise.
Before we get started today, everybody, we're going to be taking your questions throughout the show, comments throughout the show in chat. So the first question I ask is really if you guys use the VWAP, yes or no, please let us know by putting that Y or N in the chat. I always find it to be interesting to see if people tune in because they're already using an indicator or some that aren't, and how maybe they can get better. And Bri, I've said this before with you on the show. You and I have done a ton of shows before. Ben, we've done some as well. But I told Brian, and I give him all the credit in the world, and people see me talking about the VWAP all the time now. But prior to you, I didn't. I give you all the credit for all the shows that we've done. And one of the things that I talk about to everybody that watches, whether it's this show or anything, we just had a lot of people just had the Trader Lion conference. When you learn from other people, it's important to see if it resonates with you and you put it into your strategy. And today I want to talk about how the two of you have both helped me use something that actually resonates with me, and it's something that I use all the time. I think that's such an important aspect of it. And the first thing I want to talk about, Brian, we'll start with you today, is explain to people just what is the VWAP? I know most people should know, but what is it?
The best way, and thanks for, that recognition there. I mean, I stumbled onto it in 2003. I didn't invent it, but I've been instrumental in helping other trading platforms come up with the anchored volume weighted average price. So as you described, the volume weighted average price is the cumulative volume weighted average price from, traditionally the beginning of the day. When you add the anchor part to it, what it simply does is says, from any point that we choose, whether it's from the beginning of the year, from an IPO, the beginning of the week, maybe a swing high or swing low, it gives us that cumulative volume weighted average price. It's the average price paid from that point, and it represents as a moving average. It's not a traditional moving average where old data gets replaced with new data, but it's cumulative from that point forward. So it really becomes the ultimate sentiment indicator. It's more than sentiment. It's actually the truth indicator, because it tells us with absolute 100% certainty whether the buyers or sellers are in control from the point we begin that anchor measurement. There is no arguing with the facts that the buyers or sellers are in control from that point forward. So, that's a start there, I guess.
I'm actually going to pull up my screen real quick just to show everybody something. I think this is just interesting on a day like today with the CPI. I just cleared out my chart just to show you. So something that I have here, just up on TradingView, as I have my under my trend lines tools, I have the anchored VWAP. You can see that right there. And what I did this morning was I went and clicked it right to, I actually have other settings on here. I could remove those real quick. But what I did was I actually set up I'll remove all of the bands. That's one of the cool things with it. You can play with it.
Right.
Is I just anchored it to this move lower in the NASDAQ today. I actually took some shorts off of this morning when I retested it. I lost on them, but it was really relatively cheap risk because when it finally regained it after that move lower, we've stayed above it the whole day. And that's an anchored VWAP. That's, to me, something I use all the time now. And Brian, this is one of the things that we've talked about in the past. And I know, Ben, I've watched a lot of your videos as well, is you find an area of importance to you and you can anchor it to that. I think the first example you went over with me, Brian, which was years ago, was like the Nike one. I can't remember which one. I think that was the example you used. And I'm like, man, I'm going to start using that. Ben, I want to go to you a little bit. Talk to us about why. I think this is important too, right? I mean, I don't like just telling people what something is, like we like it and it resonates with us, but why for you have you chosen to use it in your strategies?
For me, it's always about managing risk. So that gives me the opportunity to really manage that risk tightly. Once, like Brian said, once I know that the buyers are regaining control, we can start to see that with an anchored VWAP that's turning up, price moves back above. I can really bench my risk tight against that. We've done that for years with trend lines and patterns and moving averages, but I found a lot more accuracy with anchored VWAP, and that's something that when you're really aggressive with your trading, and the thing that I love is once I learned the concepts of it from Brian, he was certainly the mentor for me. I can apply that to any time frame. So whether it's a day trader like yourself, it's a swing trader, a position trader, we can apply that to every time frame. And that's that's the why of it. Managing risk tightly and being able to tie that in no matter what time frame I'm focused on.
Yeah, and that's so important. I mean, Brian, somebody might have wrote a book about trading multiple time frames. Well, let's go back to you, Brian. You said 2003.
See the book right there over my
shoulder. There's the book. Oh, you got a little, yeah. Brian, why did you go to the VWAP?
I stumbled upon it in a platform called RealTick, and they had it for one day. And I noticed, I was doing a lot of day trading back then. I don't day trade nearly as much as I used to, but that it would kind of follow along with that. And then I figured out kind of a hack where I could look at by changing the intraday to 3 days, I could see where the volume weighted average price began 3 days ago. It wouldn't allow me to anchor to, day 1, day 2, day 3. But I could start to see that, the week to date was acting as support and resistance for some strange reason. And I did digging, I couldn't really find any information about it. I eventually just, started accepting it as another level of interest. To me, it's no different than a, simple moving average, a Fibonacci level, or any other indicator. It's not a system necessarily until we add a rule to it, like you did with your opening range. But when we see, how often it becomes almost the exact turning point, like you just showed in those NASDAQ futures at that 1015, 1020 low this morning, it nailed it to the penny and bounced right from that. It tells us with absolute certainty that there's buyers defending that level. And, I won't necessarily buy exactly at that point, but I look at it and say, here's where I want to really be interested. If the buyers do, if it does start to move away from that level, I'm going to buy it. And then, as Ben mentioned, to use it to measure my risk. If it breaks back below that low from the test, then I'm going to get out and move to the sidelines, and I can control risk on a 1 minute time frame, 2 minute or 3 minute, as you showed there, with 10, 15 cents loss, stop in the Qs, just a few points in those futures. Or if we bring it out to a daily or even weekly time frame, you'll still see that those levels, hold almost magically to the exact penny. It's kind of crazy how often it's there, and it's simply there because institutions use it. It's just a fact.
Yeah, I mean, one of the questions somebody's already asking me is just like, because I know like a lot of TradingView users, and I'll just go and show you something, because we're going to get to Ben and Brian's charts here in a moment. I just want to show a couple things that I do, and like I said, people have been seeing me put out so many videos on the VWAP now, and everything I do really started from what I learned from Brian on the anchoring side of things, because to me, I think that there's certain times that you're trading. There's certain things that happen, like a CPI number, which you could see today, that I want to see what happens from that point, right? I mean, I think that's such an important aspect of it. And it's why I like this tool so much, is because I choose where and how I want to use it. And you can put standard deviation bands around it. I mean, I'm sure maybe we'll look at that later, but you look at today, and just a couple of the things that I look at on a regular basis with this. First off, if you're going to use this tool, like I said, if you're on TradingView, because a couple of people were asking that question, it's under your trendline tools, and it's just an anchored VWAP, right? And I have it set to my toolbar here. So something else that I look at is a lot, and Brian, I hope maybe you'll go over that pinch one again, because I thought that was great. But one of the things I look for versus like a moving average is just what's the overall tone of the market. So what I look at is swing high and swing low, and look at how this NASDAQ is just caught in between the two. And to me, I look at it and say, we can't get away from it. We keep getting pulled back to it from the swing high and swing low. It just indicates to me consolidation. And so it's not something I'm always using for necessarily something to for a trend or for a tool, I should say, for a trade. I look at it to identify what is the market environment. And when I see a market keep getting pulled back and forth from it, it's not trending above or below them both. It just tells me that I expect a lot of two-way action, and that's what we're seeing. But I want to get to these guys today because they're, like I said, two of the best. I'm going to start with you, Ben. Ben, we've got your charts pulled up here.
All right.
Everybody wants to know, how could we start to use the VWAP, whether it's anchored, or show us some ways that you're using it.
So one of the ways that I found that, especially with my more aggressive type trading, Brian and I are kind of on different time frames, even though we blend in, all of the time frames. I'm more focused on the daily chart, and I like to be aggressive with these flag type setups or consolidations. Now, I have a specific scan that kind of puts price and volume action in front of me. So when we see heavy volume, big price moves, kind of referring to those as the pole of a flagpole. And then when you see something like, in this case, is Scorpio tankers, and we have this big run, and then it starts to consolidate. I love to come in here on that most recent high. And I used to only use a trend line. And for TrendSpider users, I'm in TrendSpider. You just right click, add anchored VWAP. And as I add that off of the high, I can see that price is consolidating below that anchored VWAP. And so that tells me that from that high in here, it's undergoing a consolidation. Right now, sellers are in control. And then what I'm looking for is it to not only reclaim VWAP, but to kind of move up and take out that VWAP, turn it back to the upside. And usually that's my clue that buyers are regaining control. They're getting more aggressive. I love to see, the big volume move like you saw there, the big price move with it. So that combination of price and volume says not only are they coming back in above VWAP, but they're coming back in aggressively. And that's exactly what I want to see as you come out of this flag type setup. A lot of times, they're flagging back into what I use as a cloud. This is a 10-20 cloud. So that's a 10-day moving average up there, 20 here, very similar to how Brian uses the 5-day moving average. Very, very similar. So then we get that big move and we get another run. And that's, really what I want to participate in is when we make that next big move. You'll see that even when it came back here, it tested anchored VWAP again, almost to the penny, and then starts to go again, even when it consolidated in that next flag over here, both the pivot and anchored VWAP playing a role. Then, the same thing happens here. You put in another anchored VWAP, you see right here, buyers starting to regain control, and then another nice move. And a lot of times I'll just follow them up, with the VWAP. As long as that volume stays heavy, prices continuing to move to the upside. The thing with these stocks that get hot and we're using momentum and they're moving strong like this is they'll make big moves over an extended period and flag continuously. So it gives me that kind of key when to come in. And not only that, but a lot of times it will tell me to stay out, because if you come up here and you don't reclaim that anchored VWAP, or it doesn't take it out aggressively, or we don't see volume, really pick up and we don't get that move like we saw back here out of those flags, that kind of tells me that, okay, maybe it's time for a bigger consolidation. Stock's going to rest, maybe move sideways for a bit.
You mentioned something I think is extremely important, at least in what I started to use it much more often is that you're using it maybe not in place of a moving average, but it's a better gauge. It's a better tool than a moving average. I mean, that's really one of the first things that when I watch Brian talk about this is that I know that a lot of people will use moving averages to gauge trend, but I think that this, to me, is a much better proof of gauging that.
I think a lot of times, and Brian does it as well, it's a combination of both. You're using those as tools to help guide you. And I know that, if we're below anchored VWAP, and also once we start pushing below those moving averages, there's a good chance, that we're going to see more of a consolidation, rather than that another breakout and another leg higher. So using them both in combination.
When you're using, I notice how you're almost like you, as it's going your way, you're continuing to use them as a guide, as a tool.
Yes.
A couple of things I want to ask you is just, I think for everybody to know and understand your time frame. So what is like your average time frame, or like what style of trader would you consider yourself? Swing?
So swing, I'm primarily a position trader, but we're not in that kind of market. So I've had to, shorten everything up to day trade and swing trading. When I'm day trading, it's the exact same concepts as I'm showing here, but I'm just on the shorter charts. I'll be zoomed into a 30-minute chart, day trading, and doing the exact same things, that I'm showing here. These setups in a healthy market, I may apply them to a cup with handle pattern that's a larger pattern and took maybe 8, 10, 12 weeks to form, but it's the exact same concept as we come out of the handle. I'm always trying to get that early entry. So we reclaim, when you're taking imagine a larger cup with handle pattern, or here, I can give you another example. Let's take a look at LI. This is one that's setting up. If I zoom out, you see it's a much larger cup with handle pattern. And again, I've got this kind of flag set up, but we're not really pushing out of the flag yet. We're not above anchored VWAP. But this is something that if the market were healthy and we were in a uptrending market, I would be thinking more of establishing a position here. For me, there's great growth behind this in sales and EPS. It's a potential leader. China stocks for a while there were acting better than most of the other groups. It was kind of like biotech in China. That was it. That was acting great. So tying all that in, I might take something like this. You mentioned the pinch earlier, and that's kind of what I see happening here. It needs to get out of there, but it comes out of that pinch. This is something that I may consider holding longer term. If it was a small cap biotech with no earnings and they're losing money, but for some reason there's news, there's volume coming in, and the chart looks great, my time frame is going to be a lot shorter. That's something I may day trade, or just 3 to 5 day swing, and I'm out. Right now, I would say I'm much more focused on the day trades, and 3 to 5 days, getting in, getting the move, getting out.
I want to go back to just us talking here for a second, and I want to just pick both your brains and ask you guys this question. Let me go to you first, Bri. If a trader's sitting down at the screen and they're looking to build a strategy, what would be one of the ways that they would be able to implement the VWAP? Like, just give us a basic way of coming in and saying, look, I pulled this indicator up. How would I add this to my charts?
Well, it depends on the platform you're on and how you add it to your charts, and it's
not physically, but like how would they apply it as a strategy? I should say. I misspoke there.
Yeah, I mean the most important things are where do I begin the measurement from, and what we need are events that are important to the market. Year to date is important. It's about how institutions get paid. They might be, looking at a biotech manager, for instance, might be paid if he beats the biotech index. So he's going to be looking at what is the volume weighted average price for the biotech index. Am I doing better or worse than that that might be how his bonus is determined at the end of the year. So year to date is always important. I put it on there on a 1 minute chart from the very first tick of the year and leave it on there throughout the year, well into the next year. It often acts as important support or resistance. So that's one important level. Month to date, we can see right now that in the SPY and the NASDAQ that those are important. Important highs and lows. The March 29th high in the S&P 500 and the NASDAQ and the Russell 2000, we had an important high there. And now we can see, if you put ARK up there, ARKK, you can see that from that March 29th high, that's the exact high so far of the of this little rally in ARK. And so what are the important events? The birth of a stock, the IPO, the initial public offering, the very first day they come public, we have a place to measure against. So if you put that on March 29th there, Anthony, where you can see.
So auto-aking it to the March 29th. Let's go there and do that real quick. I know we're going to go to your charts in a second, but as you were talking, I just wanted to do it. So March 29th.
Yeah, you know what? I see you're using TradingView. You can point and click there. You don't have to go in and put the date in.
Yeah, I point and clicked it to right there. What I had actually was this cool tool. This cool tool.
That's the one.
Yeah, exactly. I was using the auto anchor.
I thought you were typing the date in.
So see the auto anchor that they added? It's pretty cool because like when you said month and year, so like now you could just go a month and year, and I don't even have to go back to it.
Right.
Yeah. So yeah, that's the year, I believe, right? Well, actually, no, let's see, the March 29th. Yeah, and then this one's just this one.
So you've got the March, the month there. Is that?
That's the month. Yeah, and the March 29th. Correct. Yeah.
So anyways, you can see that March 29th high was the recent high was right at that March 29th anchored volume weighted average price. Just while we're on it really quick, a question that comes up a lot, I just answered it again yesterday. I think that TradingView defaults to high, low, close divided by 3 in its calculation. The true volume weighted average price takes every single trade into consideration. And the only accurate, 100% accurate number is actually, based off of tick data. Well, you can't run tick data on a daily chart. Your computer would crash. So instead, what we do is we take open, high, low, close divided by 4, the one just below that, because that's more inclusive. It takes the open price, the high, the low, the close, and divides them by 4. If you throw out the open, you're saying that price isn't important. What we want is all of the information possible for the calculation. So open, high, low, close divided by 4 is the most inclusive data that you can find outside of a tick. So, in the average calculation. So anyways, back to where we were. Important swing highs and swing lows. That March 29th has been important, not only for ARK, but a lot of individual stocks. The IPO, again, swing highs and swing lows are really some of the most important gaps that are, often in equities associated with the earnings reports. Those tend to be very important. And what we see a lot of times, kind of similar to if you go back to your NASDAQ chart for your 3-minute chart for today, is that we get direction, this morning down initially. And then we see kind of a battle at the volume weighted average price. So it kind of goes to the 4 stages where we look at initially we had a clear stage 4 decline where we were below today's volume weighted average price when you anchor it to the beginning of this downward move like you had earlier.
Yep.
And then as it crossed back and forth above and below it, you can kind of view that as a stage 1 accumulation on a very short term. So we have it battling back and forth above and below, just a little fight for, the buyers are, coming in tentatively. We created the higher low just after 9:30 and then the higher high, and that dragged the volume weighted average price higher with it. We came back and tested it perfectly and then bounced from there. So what I would even do now, Anthony, as a shorter term trader, is I would put a volume weighted average price on that low at about 10:15, 10:20 this morning, and do a handoff there. So right from just to the left, right there, I would put one right there and measure.
Handoff. I like that.
Yeah, so that's where the buyers, they took control from that point. Now, often from that handoff, you'll see that they maintain the control. Now, this time it didn't do that, but if we look at any other time frames or and here's the thing. Let me just I'm kind of jumping around here, but it's an indicator. It's not a foolproof system, and a lot of people say, well, it didn't work on this one that day. And with any indicator, what we want to do is use them to show us some structure in the market, to show some order to the data. And if the volume weighted average price shows us that order, that it does in fact act as support, well, then we can start to formulate our trade plan around that order. And we can say, use it again to measure and manage risk against is the most important thing we can do. If it's not giving us a clear signal, whether it's support or resistance, because it's oscillating back and forth above and below it, some people will dismiss it and say, well, that's useless. It doesn't help me at all. Look at how it doesn't tell you anything here. Well, that's the point. If it doesn't tell you something, the message is loud and clear. It says, avoid this stock. There's no clarity. Why do you want to get involved in a stock where there's no clarity? What we're seeking is structure, order, clarity, so that we can formulate a plan based on price action and, most importantly, manage risk against it.
I mean, the original question I asked you, and you answered it perfectly, was if you were to pull up a chart and you were to use the VWAP, how would you use it? You're right. I mean, not figuratively, but how would you go in and use it? And I think the most important part of it is that what you're saying is find the place to anchor it. It sounds to me as like, I think that's like the first thing you're looking at is like you have to formulate a plan off of, okay, this is something that I'm looking at. Look at these places to anchor it and see what it's proving you. Am I saying that right, Bri?
Yeah, and and a lot of times people will curve fit and they'll just show me a volume weighted average price and say, "Hey Brian, look at how it held the volume weighted average price from March 18th of 2020." And I look at it and it's not really an anchor point. It's got to be a significant high or low, a gap, a beginning of the month. It's got to be something significant, not just again retrofitting. We can see the clear highs and lows in the market, and those are the points we want to measure them from.
Yeah, I think that's beautifully said. I mean, like you said, curve fitting. I think that's what a lot of people will do, and I see a lot with that. And Ben, we'll go back to you, and I mean, I'm going to ask you the same question, and I'm not great at asking this question, but I guess the question is how, if someone's out there looking at using this, when you sit down at your screen, what are you looking at to add this indicator?
So
You want me
starting
to pull
with,
up your charts, maybe?
if you'd like, if you can see it, one of the easiest ways, I think, and it was actually the first thing that I got exposed to the power of anchored VWAP and how good it was using it with earnings gaps. As Brian mentioned, there has to be a reason that you're anchoring to a specific spot. And I just noticed that when we got, and this chart is RCMT, I noticed you see this volume, you see the gap, you see the big move. And I noticed how often you would get that post earnings drift. And when it would come in, the anchored VWAP would be the support area, and maybe it slightly undercut it. But these rallies after earnings and after the big volume and after the big move, that was where I first discovered that wow, there's a lot of value in this, and it was very easy for me to use at that point because those big power earnings gaps really stand out on your chart. You're seeing price up 20%, volumes up 30, 50, or even hundreds of percent more than average. And once I started attaching an anchored VWAP there and then seeing, oh, when it does come in that access support, or maybe it dances around it for a couple days, and then you really have the opportunity to jump in with who's in control. And it goes on the short side as well. You'll see whether it's bad news like we saw in some of PayPal and Meta and some of these stocks that really got hit hard when they gapped lower and on big volume, you attach an anchored VWAP to it. And a lot of times as it started to recover, that was where the sellers stepped right back in. So it works both ways. And I think kind of establishing whether it's earnings gaps, high volume events. This red one that you see on my chart is, like Brian mentioned, year to date anchored VWAP. He's pounded into my head how important that is to have on my charts. It's on there from day one and it stays on there all year automatically. But I think there are a lot of ways to use it. You just have to find the one that best fits. If you're brand new to it, I really like starting, and you can really kind of get used to how price reacts to it and around it by using the earnings gaps. And we're getting ready to go into a brand new earnings season. I think that's a great approach to get started.
So couple quick questions I have, because we're going to get to Brian's charts now. And I just want to ask both of you, when you're looking at, because a lot of people are going, well, how do you identify where to anchor? Because like you had said, Brian, you don't want to curve fit. You don't want to do that. And I think that if someone were to say, to ask you, Brian, how do I know where to go about doing that? What would you say to them is the simplest way to go about figuring out some spots that they would start to anchor?
Well, again, just look at the chart and look at the obvious levels. We can start, if you want to pull my screen up there, Anthony, we can start with what are some key events in the market. So, if we just start, let me do this. Let me erase all these. Actually, I have these stuck on there. So what I have is the COVID volume weighted average price from the COVID low. That was clearly a very important event. So we want to measure price against that. Now, a lot of stocks came down, found support, rallied, and you can see that the market did that as well. The S&P found buyers almost precisely there. And here's the year-to-date volume-weighted average price, which pretty much coincided with the all-time high. So that was kind of lucky that those two came together at the same time. Well, we rallied up and then had another decline. So it was only probably about this point when we got back below the year-to-date VWAP that I actually put this anchor on there, because I knew the March 29th high was important. I didn't know it was important that day. So we have to look at it and say, when do we recognize it? We recognize it maybe 3 weeks later, but that doesn't mean it's not valuable, because you can see how the market on its most recent rally off of the volume weighted average price from the COVID bounce, we saw it come right up to that volume weighted average price from the March 29th high. And that's where the new leg down began. So again, look at the key levels. And now when we see that, I've also had this volume weighted average price, the high prior to COVID. And you can see that's what we're holding. And I've been talking about the volume weighted average price from the low of 2018 right here. So that will come down in towards that 350 level. There's a couple of other interesting things at that 350 level, by the way. If we take Fibonacci, we can see that, we've got a 50% retracement of this entire range. If we were to add a 200-week simple moving average. So what I'm trying to point out is when we use these together and, try to look for a confluence of things that might become important in an area, when we're looking right now at the SPY, and I put that 200-week moving average in there, you can see how it lines up perfectly with the volume weighted average price from the 2018 low. So let's just color that green so we can differentiate it. So here's that 200-week moving average, and that's where that 2018 low occurred last time. We anchored from there, and those two come together at a 50% retracement. So we're starting to form that picture. When we look at a 65-minute time frame, for instance, we can say, okay, what was that most recent high? There's the March 29th high, and we can anchor from that most recent high, and we're, and this low. So what we're seeing right now, to me, is a whole bunch of indecision. It's not giving me much value. It's saying that the action of the last month is really just kind of back and forth in here. But the primary trend is still lower, so I don't trust it. And, if I'm not finding value on the shorter term time frame, it tells me then just, understand that the market, maybe it means we're undergoing larger accumulation, or this is just the next sideways before flush down towards that 350 level. It doesn't always have to make exact, precise sense and say, okay, here's where to buy or sell. So instead, we go to individual stocks. I pointed this out earlier in the week, or last week rather. I saw a lot of people talking about GTLB, and it was on my radar as well. And on this day, I said, listen, there's a lot of talk about GTLB. Be aware it's coming up to the volume weighted average price from the IPO. And you can see how that volume weighted average price acted as support initially, then resistance. And that very day, look at where the high was for that day. I mean, it's done nothing since then. And then Roblox, same story. A lot of people were talking about Roblox and getting bullish. I saw a lot of bullish, talk in here. And I said, okay, great, but be aware, we've got the year to date. That's that pink line, the year to date VWAP, which has been important as a place where, sellers have been found before. Don't be surprised if we see sellers in that area again. And lo and behold, I mean, it was pretty much exactly the high. So then you say, well, okay, where does this have the potential to pull back to? Well, we could look at this low and say, that's an important low, because that low is what began this rally from 24.5 up to 44. So I want to know, and you can see it touched right there perfectly. And now is it going to pull back there and touch again? So when I look at this on the daily time frame, I see that the low from mid last month is important. I'll look at a 65-minute time frame and try to get some detail on that and say, there's that low, there's the last time we tested it, and then where did the buyers gain control last time? Well, as it got back above the volume weighted average price from where the profit taking began, these lower highs and lower lows, it's at this point we knew with certainty that the buyers were in control, that anyone who shorted on average during this pullback was losing money. But right here, the buyers were 100% with certainty, we know, on average in control. That's where they gained their advantage. They lost their advantage as it broke below the volume weighted average price from that level.
Quick question about the year. Yeah, quick question about the year to date, Bri. I mean, how much emphasis do you hold on that? If a stock is below that, does that mean you're primarily maybe looking bearish? If it's above it, does it mean you're primarily
you just
bullish?
fade it out a little bit? And I don't know if you're still talking, if that's my internet or yours.
I am. So the question was about the year to date VWAP. How much emphasis do you put on it for identifying position direction? Are you primarily looking for shorts if it's below it? If we're above it, are you primarily looking at longs? How much does it impact your decision making on direction?
Yeah, the direction is really mostly, what's the direction of the longer term moving averages, the 10, 20, 30, 40 week moving average. So when we look at Roblox, it's still in a horrific downtrend that'll probably take, 6 months, 9 months, a year to flatten out. But for a trade, obviously, the stock nearly doubled, right? It doesn't mean the longer term downtrend isn't over, but the stock has nearly doubled. So as it makes a rally of this magnitude, and I don't have an important moving average there, or let's say there's not an important Fibonacci or whatever trend tool, I'm aware to say, here's where we have the potential for supply. It's a level of interest on the way up. And then as it gets there, we switch to a shorter term time frame and see that, the sellers emerge. So, from that day, I would put a volume weighted average price on the action. From that day, the sellers took control right here that very day. So it showed that high did in fact find sellers for the day, and that's been the peak. It was defended here. So it's using them all together. Whereas if we're in 8 and AMD, hit it perfectly in there as well. So if it's experienced a large rally up to that level, then I'm aware of it. I was aware of it here. It didn't become resistance. It won't every single time, but it's a logical place to start looking and say, here's where we have the potential for supply that's strong enough to become resistance. So it's a level of interest. And you can pull up any chart, any time frame, and do the same thing. Here in gold, we saw it was perfect support right here. Then that support broke and it became resistance before the next big leg lower. And it, over and over again, we can see this in in the bonds. We can see year to date VWAP. I don't know why it's not showing there, but that's okay. So it's right there. We saw sellers at the year to date volume weighted average price early on for bonds, and it's been run away from there. So anyways, I'll slow down there for a moment.
No, that's great. I mean, I think, I'm just putting myself in the listener's shoes as well. When I think about the year-to-date VWAP, I always look at it as, for me, it's like, okay, they can't regain it. If they can't regain it, it tells you about the tone of the market once again. So I have to really look for confirmation on any sort of longs if it's failing there again, because that means that the trend really can continue. I mean, that's really the way I'm looking at it, because from, like you said, from the beginning of the year, that's really why I like that year-to-date VWAP so much, is because it really helps me set the tone for what the price action is. Something you said I thought was interesting is you use moving averages alongside. That's initially where you look for a trend, but then you will use the VWAP from there. Could you just explain that a little bit more? Maybe what we'll do is we'll do this for both of you. I think this could be kind of fun. We'll pick the major indices and maybe we'll go with SPY or S&P, NASDAQ, or Russell, whichever one you want is fine. I think, and kind of just do some current analysis on it. Maybe we'll take it back to where there's nothing on it, kind of like what you did with me, and then maybe we'll go and say, let's take a look at it and where we are right now, and have you identify what you think this environment is using the moving averages along with using the VWAPs.
Okay, well, I think that number one, let's. I'm not gonna. Let me see if I can find a. Here's what we can do. So here's the S&P 500. Let's just go down to the absolute bare bones definition of trend.
Yes.
We had this high, and then we had a lower high. We had this low, and we had a lower low. So we have lower highs and lower lows. That's really, that's your trend bias right there. We have a pattern of lower highs and lower lows on a weekly time frame. We're in a downtrend. We're in a bear market, whatever you want to call it. We're in a bearish environment. So if we then use moving averages to kind of add a little bit of order to that, what tends to happen is that we see, let's see if I can get that blank. It's tough when you draw so much on your charts.
I know. And what we'll do for you, Ben? We'll go to the NASDAQ for you.
This is pretty. I apologize, Sarah. I already spoke over you. This is pretty basic. So I've got this blue is a 20-week moving average. The green is a 30-week, and the black is a 40-week. So that's approximately 100 days, 150, and 200 days. So those are, what, when we're in an uptrend, we tend to find support at the rising moving averages. And what tends to happen is that first it'll be the shorter term time frames as the trend is real strong. Then the longer term, intermediate term moving average acts as support, then the long term. And on the way down, we start to see the same type of thing that we'll see. Here's what I might sketch this market out to be going forward. Let's say we've made a low and we do something like this. I would expect we come up to this moving average and come back down. And then we maybe, and then the 30-week moving average might look like this. We rally up to that and we come back down. And then this moving average starts to cross the intermediate term one. And that would say stage one accumulation. Longer term 40-week, 200-day moving average starts to look like this. The 10-week crosses above the 30, above the 40. And then right here is where I would say, okay, this looks like the beginning of a new bull market, stage two uptrend on the weekly time frame. If we were to undercut the most recent relevant higher low, that would negate that breakout past those moving averages. But at this point, I would expect something like this to occur, that we're going to see higher highs and higher lows in the market develop. And that's where our opportunities for the new bull market are. If instead we don't find that this 200-week exponential moving averages does hold a support, we might see something like this, and we come down to that 200-week simple moving average, which is, as we know, also the volume weighted average price from over here, and that 50% retracement of the COVID low to the all-time high. So it's about what are the scenarios, and maybe we undercut it a little bit, and then we start to see that pattern. If they don't scare you out on the way down, they'll wear you out as it goes sideways. And then in 2024, we have a new president, whatever, and these longer term moving averages flattened out. Then perhaps that's the bullish, scenario from there. So that's the bigger picture in my mind about how I see market structure first and foremost. And it goes back to stage analysis, the stuff that I learned from Richard Wyckoff and Stan Weinstein, and I wrote about in my book. And it's applicable on every single time frame. So I'm not going to become longer term bullish until one of those two scenarios occurs. And I'll be more bullish if the 200-day moving average is flat to rising, rather than if we have a big rally up to it. If we rally, let's say from 350 to 400, I think you're likely to see it come right back down. A lot of people will get excited, but if that 200-day moving average is still declining, in my mind, it's still guilty till proven innocent. And you can certainly trade these big bounces because they can be 30, 40, 50% bounces, but it's, they need time to heal as well.
Yeah, so thanks for sharing that, because so to me, when I look at your stuff, it's setting up with the daily and weekly moving averages. That's setting the tone. And then from there, you're looking at along the way, you're navigating with the anchored VWAPs to see, looking for trade opportunities and just more proof of trend.
Yeah, exactly. So more for timing than anything. And really, like you said, proof of trend and, more clarity on the shorter term timeframes. This is just this is my macro view. And guess what? If the market changes, my macro view will go out the window immediately. I don't care about the macro view because I don't trade it, but I know that it's going to be a lot easier for longs if we're in this type of environment than it is over here, certainly. So I'll use that to my advantage and say, I know the wind is at my back, but I'm still going to take each trade based on its own merits. People tend to get bogged down in the market too much when there's great opportunities day in and day out in the individual stock. I used to make that mistake all the time. Well, the market's in a bearish phase. I see this bullish stock, but I'm not going to participate, or I'm not going to participate because the volume isn't big yet. And then I would recognize 3-4 days later, the big volume comes and the stock just rallied 10%. And, it all comes down to price action, who's in control, and the anchored volume weighted average price gives us that 100% objectively.
Ben, we'll go to you now, and just let's go over. I mean, I don't know. I said we could use an NASDAQ, but we could use whatever you want. I don't really. It's up to you.
I'll take a look at the cues and just more the recent action. You have the obvious low here, so we're going to attach an anchored VWAP there, and you have the most recent swing high here. You're attaching anchored VWAP there. And you can kind of see that we're still kind of dancing around that. Now, given the news this morning and the CPI number looked like we had every reason, to move below that anchored VWAP from off of the low, roll it back over, take out that ascending trend line there. But that's not the way it happened. Like you showed earlier on the shorter term time frames, buyers stepped in, regained control or above the daily anchored VWAP, and then reclaim that anchored VWAP from off of the low. Now you'll just have to see if that anchored VWAP from off of the swing high, does that act as resistance? At the same time, you're right there. I call cloud, but it's the 10-day and 20-day moving averages right there as well. But bigger picture, this is a 50-day moving average, 50 and 65 moving average coming down from above. So even if you make that bounce here, you can see how back here, that 50-day moving average acted as resistance and rolled back over. I'm encouraged, at least on the short term from a swing trading perspective, that maybe we're going to get a few days now with looking at this candle. And if we close strong and back above this anchored VWAP, maybe we're going to retest this area again. 296.58 was that swing. So that's how I look at it. Now, on the other hand, if we roll back over, close below that anchored VWAP from off of the low, take out that trend line, we'd be back below 1020 cloud. That's going to tell me that the sellers are regaining control there. And there's a good chance that we're going to come back lower, maybe retest that low or even undercut it, keeping in mind that the bigger picture is down, like Brian showed. So that's the way I kind of use that to interpret the shorter term trading and especially my swing trades. Like I mentioned earlier, over that 3 to 5 days, you can still make money in this move or downside on this move or this move. But right now, there's not a lot of clarity just because we are kind of consolidating sideways on this time frame. So we'll have to see if we can push back above there, turn that anchored VWAP, both of those back to the upside, push back above that swing area, that swing high at 296.58. Maybe we've got a little higher. This anchored VWAP up here is from this swing high. That's going back to the March swing high. And then I have year-to-date anchored VWAP up there. I'm not ruling anything out. I'm just letting price guide me. If we roll over here, I'm going to be more aggressive on the short side. If we can make progress here, get back above those anchored VWAPs, short term, maybe I'll stay with a few of the swings on the long side. And again, it's just tying that in with, like I mentioned earlier, biotech has been hot. It's working. Solar has had its days. So just tying that big picture in and then let it guide me on whether I want to be long or short over those swings.
Thank you for sharing that. I think it's so important when we talk to guys like Brian and Ben is to understand their process as to how they're choosing where to anchor the VWAPs, how they're using them, what their thinking is prior to it. I think a lot of us, we look at analysis and we see the things that you guys put out in other people. And it's like, well, where does that come from? Where's that thought process? That's why I appreciate you guys both sharing, what your thought process is behind it and helping people learn how to think and not telling them what to think. Brian, it's funny, as many times I've been with you and talked with you before, I learn something every time, but today I'm understanding even more, and just understanding like how you're looking out at the market with the moving averages, and then you're going in and then you're saying, okay, now I'm going to look at these VWAPs. Are they showing me confluence in certain areas? Does that area really matter? Just other little tidbits that you're using to help guide us. Like we say, price is from one price to the next is a journey, and how we get there is the hardest part about trading. It's not knowing where that next price may trade, because we all could be bullish or bearish, but it's how we get there. And I think that's what VWAPs help me so much with, is they help me as a great guide from one price level to the next. I mean, visually, even Ben, when I just saw what you were doing, is exactly the way that I did it on the QQQ and the NASDAQ myself, because to me, that's the way I see it. I look at the swing high and low, and I feel like they keep coming back there. They can't separate from them. But if it does start to get daily closes, that proves to me that the next one is likely to trade now. It has probability. So I have some questions from earlier. I know some people are putting questions in now. We will start to take your questions, because we've only got about 5 minutes left. I mean, so one of the questions was from the beginning. It said, I heard VWAPs are used by large institutions to see how their traders are performing. Is this true? I know, Brian, you mentioned that. I think someone was just asking about that.
Of course it's true. I said it.
Yeah.
No, it is true. I mean, this is how institutions get paid. Think about if you're a manager of a semiconductor index. How does how do you get measured? You get paid to not only do a good job on an absolute basis, but how did you do, really, most importantly, on a relative basis, is how these managers get paid. So they have to find a benchmark and say, the SMH, your semiconductor fund was down 18%. Versus the SMH was down 22%. Good job. Congratulations. Pat on the back. Here's a nice big bonus for you. But if instead you were down 26% and your SMH was down 22%, they can objectively say that you suck this year, and we're bringing in this new guy who shows more promise. And this is how institutions, on a, make these decisions about who their fund managers are, the mutual funds and that sort of thing. It absolutely is, unfortunately, for most institutions, mutual funds, pensions, and that sort of thing, they don't care about absolute performance. It's about relative performance. So the relative that they look at is changes at the beginning of each year, January 1st, 2nd, or 3rd, whatever the new trading day of the year is. How do you do versus your benchmark, not just on the absolute basis, but volume weighted average price wise as well.
And this is kind of a follow up to that. Is the VWAP a self fulfilling prophecy since large institutions use it, and that's why it works?
You know what a lot of technical analysis is, and if it
Yes.
is, who cares? The thing is, a lot of people are too focused on the intellectual aspect of it, and they overthink it, say, why does it work? Listen, if you have the puzzle, the key to the puzzle, who cares where it came from? Just figure it out and use it to make money and manage risk and realize that the market is going to morph and change, and that everything that I kind of sketched out on that weekly time frame for the SPY, that's the exact way I look at a 1-minute chart for today, a 15-minute chart of the last 20 days, etc. That it's all fractal in nature, and it's up to us to say, well, am I an institutional money manager? Should I really care about how I'm doing versus the benchmark? Or am I looking at it trade by trade, stock by stock? I'm not interested in the euro and the dollar and what the chairman of the Fed says, because I'm not moving billions of dollars around. I'm interested in, the market gap lower this morning, but who's in control, the buyers or sellers? The S&P is down 2 pennies, but the buyers are clearly in control for today. From the open, they're in control. So anyways, I think I hopefully answered that.
No, yeah. I mean, we're going to go to the next question to you, Ben, but I just wanted to pull this up. And so Anna was saying, I still don't understand, for a day trader, where do you anchor to futures? And we went back and basically, Brian and I just did that exercise where, I told him that I anchored it from the CPI number. And then he's like, do the handoff, which I love that. It's great, by the way. And let's put it this way. As day traders, we trade two ways, right? We trade two sides. And for me, a lot of what I want to do as a day trader is know. Sometimes I should say this. It's more important for me to know which side I don't want to be on than really the side to be on. And I mean this in this respect. If the NASDAQ is going higher or off of this morning's VWAPs, the way I anchored them, and it's showing that it's holding above them, I know I don't want to be short. I don't care what my strategy says. When I see that they're building on top of them, I might have a short signal up here at, let's just say, 11,850, right? Let's just say that that's hypothetically what I have. I'm not too interested in taking that short, because they keep proving to me through the way I've anchored the VWAPs, my intraday futures trading, that it's holding above it. So I'm going against what's working. So I think that, for me as an intraday futures trader, this is a simple way you can use it. I'll let you guys both comment on what I'm talking about for intraday stuff. But to me, this is one of the ways it helps me.
Absolutely. Whether it's 1 minute, 3 minute, 5 minute, 30 minute, 65 minute, you anchor it to that first bar of the day, and it's going to tell you who has control for that day. If you're above rising anchored VWAP, buyers are in control. Below a declining VWAP, sellers are in control. Yeah, and it doesn't make sense to be on the other side of that. You usually learn real quick that you don't want to be on the opposite side of that. So if you're using that for day trading, that's the way I use it, is have it on that very first bar of the day. And that kind of guides me on the day. If we're going to get a trend day up or down, you're going to see price stay below or above, that VWAP.
So the next question I want to go to is, let's go to this one right here. I think this is a good one. Does the year-to-date anchored VWAP have more power than a month-to-date anchored VWAP? Just wondering if longer-term anchored VWAP is more powerful than the shorter term. I think we take this for both you guys in the context of, does the longer time away from where we are have any sort of more power in a sense and what their way that they're asking it than a shorter one that maybe I did this morning from the CPI. Go to you, Ben, first.
I would just say, is it reacting? Is price reacting to that anchored VWAP? I mean, it's really simple as that. The one that has the most power is the one that price is reacting to.
Yeah, it's time frame dependent. If you're looking at, if you bought Roblox at 26 and it's approaching the year to date volume weighted average price at 40, whatever it was, you've got to be aware of that it's time to really start to tighten your stops. It's at a potential level of resistance. Or if you've been on the sidelines, and you can't, that FOMO is getting you. Everyone's talking about Roblox. That you can't chase it up there after such a big move. It's the questions, as always, of where has it come from? It rallied close to 100%. Where does it have the potential to go before it's likely to encounter supply? Well, the anchored VWAP from the beginning of the year has been resistance on 4 other occasions. It's clearly a level of interest that you don't want to chase the stock up in that area. And if you're long, you raise your stops.
I think that was a great question, you guys. Thank you so much for asking that. This is my last question for the day that I'm going to take. And like I said, we'll go to both of you guys, and that's it. And I like this question because we didn't really talk about it today, but I want to hear your thoughts from both of you. We'll stay with you, Brian, then we'll end with Ben. Can we use the bands of the anchored VWAP like a Bollinger Band strategy as a mean reversion? What are your thoughts on the standard deviation bands around the VWAPs?
I don't use them at all. I've seen some people that like them, and I'd say that it's just like anything. If it makes sense to you in your trading, absolutely use them. You can use them. You should use them. To me, I've already got some moving averages on my charts. I've got multiple volume weighted average price levels. If I start adding moving average clouds and standard deviation bands and all these trend lines, it just becomes overwhelming. So, do what works for you. There is no dogma here. There's no perfect way. I love how, Anthony, you came up with your opening range strategy. I'd never, thought of that. And I think you brought that out maybe a month or so ago. By the way, I forgot to say happy birthday, I think, last week.
Oh, thanks, buddy. Boy, it's going quick. Time flies, man. So, Ben, we'll go to you. What are your thoughts on those standard deviation bands around the VWAP?
Yeah, I personally don't use it, but if you're comfortable using it, for me, it's an area to start paying attention to see are buyers or sellers stepping in, who's regaining control. I don't really view it as one line or one price point. It's an area. It's an area where I'm going to zoom in. If I'm on the daily chart, I'm on the weekly chart. It's telling me that, hey, I need to zoom in a little closer, see if the buyers or sellers are stepping in here, who's taking control here, what does price and volume look like. But if it helps you, just like I like the 10-20 cloud rather than having just a 10-day moving average, if it helps you to define that area rather than a price point, by all means, use it.
All right, guys. That's all the questions I'm going to take for today. Once again, like I said from the beginning, it's 2 of the best in the business that I truly appreciate their work and their consideration. Those guys, just the way how much you guys have helped me. I can't thank you enough. I mean, and the way you guys explain things it's so important to understand the process, right? I mean, I like I said, I've talked with Brian so many times. Ben and I have been talking a lot more as of late, but understanding how to think. These 2 guys are some of the best I've ever met, and I appreciate what they do. Brian, everyone keeps asking, when's your book coming out? You're doing a new book. Talk to us about that, and obviously everyone knows Alpha Trends on Twitter, but what about the book?
It is. It's written. It's about. I forgot what the title is. I gave it to my editor 3 weeks ago, and I absolutely dread looking at it. Again, I'm going to have to do some more work on it here, but it'll be ready for the printer in September. And then unfortunately, the printing people have backlog. So they tell me December, but I've got a couple tricks up my sleeve to try to get that a little bit earlier. I'd love to get it out, sometime early in the fourth quarter.
That's awesome. I'm super excited about that. I can't wait to read it. And obviously everyone will stay posted from him on Alpha Trends and Twitter, and you can go to his website as well. Ben, talk to us about where people can find you on Twitter. Oh, there it is. Look at
All right.
Anchor VWAP.
I'll be waiting on my signed copy.
Yeah, Brian.
His original one is
Look.
signed. Can't wait for that. I'm Pattern Profits on Twitter. That's where you'll find me, and I'm always around on there answering questions, and definitely spend probably more time than I should over there. But that's where you can find me. Absolutely, big part of our lives.
I know. I love Twitter. I think that, you two guys are two bright spots on Twitter for a lot of people. You guys answer questions. You're putting out great content. You just got to learn how to use Twitter. That's what it comes down to. I see people complain about it. I'm like, well, it's just really easy. You don't have to be on here if you don't like it. And if somebody's bothering you, you can mute them. It's just like I go there to learn and to see what people's thoughts are on sentiment. I think Twitter's a great place. And like I said, you two guys are great follows. Highly recommend everybody go and follow you guys. Like everyone's saying, we should take this show on the road. These guys are great. They make it easy for me. And thank you to all of you that commented and asked questions today. Without you guys, the show doesn't exist. So that's it for today, everybody. I appreciate you guys again. Trade well and enjoy summer.
Appreciate you as well, Anthony. Thanks for doing it. And, include yourself in a must follow there on Twitter. So thanks again.
Thank you, my brothers. I'll see you guys. That's a wrap for today. See you.
Thank you.
Bye.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.